This is your LMAX exchange technical update for Thursday, August 4th, 2016. Euro dollar. So it's clear the euro has stalled out in recent trade with the market kissing the 100-day moving average before reversing lower. At this point, look for a lower top now to be in play by that 100-day moving average, that high that we saw on Tuesday, which comes in around 112.34 in favor of the next major downside extension back towards critical medium-term support at 109.12, which is that low that we saw back on the 24th of June. Sterling dollar. So cable is in the throes of a correction out from those recent plus 30-year lows, and there's room for this correction to extend really back towards the 138 area before the market looks to put in a lower top. It's very possible that we stall out ahead of 138, but again, with the market seeing some intense setbacks in recent weeks, a correction towards 138 should not be ruled out. But overall, the downtrend remains intact, and a lower top is sought out ideally somewhere ahead of 138 or around 138 in favor of the next major downside extension towards next key psychological barriers, which come in at 125. Dollar yen. Dollar yen remains confined to a well-defined downtrend, recently stalling out at 107.50 ahead of this latest intense pullback, which if broken below 98.99, that current 2016 low, could open the door for the next measured move downside extension towards the 90 area. At this point, look for any rallies to be well capped towards 104, with only a break back above 107.49 to compromise this bearish outlook. Euro Swiss. Euro Swiss has been confined to a range between roughly 108 and 110 over the past several days. This goes back to about the middle of June, and so a break on either end will be required for clear directional insight. Aussie dollar. So Aussie dollar gains continue to stall out up towards and above 76, and the market is looking for another topside failure here ahead of a resumption of declines. Ultimately, though, we would need to see a break back below the low that we saw on the 27th of July around 74.21 to strengthen this outlook and accelerate declines. Back above 76.77, however, would negate the bearish outlook. Dollar CAD. So dollar CAD has been comfortable consolidating in recent trade with a minor pullback, but overall that breakout that we saw the other week beyond 131.89 is a significant development and shifts the structure to the top side. At this point, any setback should be very well supported above the 28.60 area in favor of the next upside extension beyond the recent highs that we saw from the other week at 132.54 and towards the 135 to 140 area. Kiwi dollar. So a sharp, strong bearish reversal day in Kiwi on Wednesday, with the market now setting the stage for a resumption of declines back towards next key support at 69.52. A break below 69.52 will then open an acceleration down towards medium-term support at 66.75. At this point, any rallies should continue to be well capped up towards 73, with only a break back above 73.25. That 2016 peak going back to the 12th of July would negate the outlook. SPX 500. So the S&P 500 is showing signs of stalling out after putting in a record high earlier this week, and the market will now need to establish below 2150 on a daily close basis to strengthen this outlook and accelerate declines. Inability, however, to establish a daily close below 2150 will keep the pressure on the top side and leave the door open for a fresh upside towards the next key psychological barrier at 2200. Gold. So gold remains highly constructive, with the market recently looking to put in a higher low around the 1300 area in favor of the next major upside extension beyond 1375 and towards the 1400 to 1450 area further up. At this point, only back below 1300 would compromise this intensely bullish outlook.